Good afternoon and welcome to today's exclusive webinar, Offshore Investing Opportunities in Foreign Markets. My name is Karina Villegas and I'll be your host and moderator for this afternoon. But before we begin, may I remind everyone to type in your questions even while the presentation is ongoing so we may ask them later during the Q&A session. In this afternoon's session, we will be covering the topic of offshore investing opportunities in foreign markets. As your trust partner, we know how important it is now more than ever for you to be well informed and constantly be updated on the changes and different strategies that can help you optimize your earning potential. And this webinar series was created in response to that need. I hope this afternoon's session will provide you with insights that will help you prepare and make sound decisions in investing and diversifying your portfolio moving forward. To talk about why do you need to invest offshore, our first speaker today heads the Portfolio Strategy and Advisory Division of Metrobank's Trust Banking Group. His team specializes in strategy formulation, asset allocation, and portfolio construction necessary in managing the various portfolios managed by the Trust Banking Group. He is a CFA charter holder with 10 years experience in banking, investments, and asset management. Please welcome one of my favorites, Mr. Don Hernandez.
Thank you, Karina. I hope you can hear me well. Guys, I'm really happy to be back in the webinars. It's been 4 months since we started this. We've guided you through by introducing you to the investment path. We talked about equities investment. We had a market outlook. We had some talk with regard to the retirement and why is it important for you to save. But for this month, we have something special. It's really something about opportunities. We wanted to focus. What are the opportunities out there offshore that can basically help you and your investment grow? So why I'm here, I'm actually not the main meat here. I'll be your front act. What's more exciting is the speaker after me. But for me to introduce this topic, I would give you 3 reasons why you should invest offshore. Okay, so let's begin. The first reason is actually a very cliche statement. The first reason is don't put your eggs in one basket. It's actually an English proverb. So whenever we talk about investing, if you talk to your friends, talk to people who have experience in investing, this is what they're going to tell you. Don't put your eggs in one basket. But what exactly does that mean? Uh, if you've ever heard of the term diversification, it's basically a very technical term, but let me try to guide you on how to better understand it. Now, what you have in your screen is a chart of a hypothetical growth of 100 pesos over time. So assuming these are the returns of an asset class, you can see, let me just describe the graph to you. The straight line that you're seeing in the middle, the solid dark blue line, that is your cash asset. So basically that's your time deposit that grows about 3% per annum. So it's steady growth. The light blue line that you're seeing is your bond line. So basically it's at the end of the 10 years, it's better performing, but there will be some ups and downs in terms of swings in terms of prices. And the third line, the purple line, is your equities line. And if you're looking at the equities line, yes, it has the most outperformance over time, but sometimes it will scare you. The swings or what you call the volatility is actually scary for somebody who can't take much risk, no. So, but in terms of the term diversification, I would like you to take a look at the dashed blue line right in the middle of the chart. So what are you seeing here? This portfolio line is a mix between equities, bonds, and cash. And what diversification does to your portfolio is that it gives you a premium. You enjoy the premium return that is brought about by your equities asset class. But it gives you the swings or the volatility near a fixed income portfolio. Of course, it depends on how much weight there is, but diversification basically mitigates some of the risk and gives you a more relaxed line and less swings, but a premium in terms of return. But this is one when we say about don't put your eggs in one basket is bonds, one basket is equities, one basket is cash. But actually, I would like to focus more on the purple line in equities. It's actually one basket in itself, and there are multiple baskets within. And I'm going to give you a specific snapshot here. I'm showing you here five indices. You have the Philippine Stock Exchange, the S&P 500, the Nikkei 225 in Japan, the MSCI Eurozone, and the CSI 300 in China. And if you're going to look at these indices, the returns over the past 5 years are very much similar in terms of direction. In 2017, 2018, and 2019, everything is green, red, and green. If you're looking at 2016 and 2020, there have been some deviations. And that's what we're talking about. Even in between or within the asset class, there's also a way for you to diversify and not putting yourself in one basket. So if in 2020 your 100% of equities is actually in Philippines, you would have done negative 6.9. But if you have diversified, let's say you put some in S&P and CSI 300, then you must have performed a lot better than a lot of people who've stayed just here in the Philippines. And that's my first point. Your first reason, don't put your eggs in one basket. Explore offshore and diversify your Philippine exposure. The second reason is to invest offshore is to broaden your investment universe. What does it mean? For me to drive my point, I'd like to go back in history and talk about the Spanish flu in 1918. The Spanish flu was a game changer to a lot of businesses. Historians and analysts alike would agree that some of the businesses actually survived while some did not. And the reason being is that technological developments advanced some of the businesses. So if your business changed to give these improvements, you would have survived. While if you stuck with the traditional way of doing things, then you would have lagged behind. A perfect example back then was Ford's assembly line. Although Ford's assembly line was invented sometime around 1913, if I'm not mistaken, it wasn't adopted by the concept of assembly line was not adopted by a lot of businesses until such time that the pandemic broke out. So the pandemic did not invent the assembly line, but it advanced the technological advancement of the assembly line to a lot of businesses. And those who adopted it actually kept them afloat and recovered quickly compared to those who stayed with the traditional way of doing business and they fell. And I think that's no the shape of recovery that we're talking about is the K-shaped recovery here. And going back to the present in COVID-19 pandemic, we're actually experiencing a very similar situation, and we're seeing some sectors or industries that are actually outperforming traditional brick and mortar companies. So you have payment and remittance, e-commerce, online media, and technology. So what do I mean by broaden your investment universe? How does it go and how does it play out to your offshore investments? It's just that unfortunately here in the Philippines, where our Philippine stock market is not as expanded in terms of coverage of the sectors. I mean, if you would have wanted to invest in GCash, you would have, right? But unfortunately, it's not yet listed, and I think there's some development that needs to be done there. So by broadening your investment universe to offshore, you'll be able to expose yourself or your portfolio to the different sectors that are actually trending growth stories that will be here in the upward direction of the K shape, and diversify your exposure for your equities. And it brings me to my third and final reason, which is very related to the second reason. Go offshore because exciting and emerging growth stories and themes are within reach. Now, I will not go too much deeper here in terms of this reason. Why? Because the next speaker will actually be giving you a deeper dive on the emerging growth stories and themes. And that's what we're excited about. And invest offshore for you to be able to be exposed to that. So you have one, don't put your eggs in one basket. Two, broaden your investment universe. And three, go for these growth stories and themes offshore. So without further ado, Karina, I'm bringing back the floor to you to introduce our second speaker. Thank you very much, guys.
Thank you, Don, for that very interesting presentation. Just a quick reminder, key in your questions so we can discuss them later during the Q&A portion. Moving on to our main topic of this webinar, to discuss the global themes and trends you should look out for as an investor, our next speaker is a senior product specialist for the Credit Suisse Thematic Equity Funds. Pascal started his career as an engineer and project manager in 2008. He moved to Edmond Rothschild in Geneva in 2009 as a portfolio manager and senior analyst, and he joined the Credit Suisse Thematic Equity team in 2018. He graduated with a Master of Science in Electrical Engineering from the Swiss Federal Institute of Technology in Lausanne and a bachelor's degree in Electrical Engineering from McGill University, Canada. Please welcome the Director and Senior Product Specialist of Credit Suisse, Pascal Mercier. Go, Pascal.
Good afternoon, everyone, and thank you very much, Karina and Don, for the introduction and the first part. And very happy to be here. So thank you very much me for having us. It's a pleasure to be on this platform today, to be with you. And obviously, we would like to extend our appreciation across the firm for having us on this platform. As it was introduced, I think in the first part, I think expansion of your investment universe outside of Philippines is very interesting. There are many growth stories across the world, across different markets that you can focus on. And my focus is on disruption, on innovation, as it is shown here on this page, within the thematic space, thematic equity space, where we focus on different themes across the world. And these are very interesting stories because they are obviously changing the world, changing the way we can think about technology, about new areas. And as Don introduced, I think very well, a pandemic or an event like we had last year and still ongoing is truly a game changer in many areas. And I think any investor should have a look at this view of the world, at how we look at things, because this is truly changing the way we can think about the world going forward. Here are a couple of headlines. I think the news flow across the world, if you look at any newspaper, any information network, you see a number of news flow, a number of pieces of information which are well aligned with our view. And you see disruption all over the place. I mean, a couple of examples here. You think about 5G in the Philippines here, being developed, being unfolded. Farming, this is just an example, using more and more robotics. ESG investments, sustainability becoming much bigger and getting a lot of traction. You can think about cybersecurity. One of the biggest breach we've seen last year was with SolarWind. Something massive happened, went a bit under the radar, but obviously Microsoft was hit pretty hard. They even had access to the source code at Microsoft, which is in a way the crown jewel for a software company. So this has massive implications. Moderna, another example here. What happened with Moderna? Well, they came up with messenger RNA technology, vaccines for COVID-19, among other players. But this is truly changing the way we can tackle vaccine treatment going forward. So we see disruption, we see this news flow across the world. And I think why we look at thematic investment and why we think about these themes is fundamental to try to assess and try to invest in these opportunities. We don't know what's going to happen next in the next month or 6 months in the world or in the market. It's very hard to predict volatility in the market. I think Don did a very good job at telling you how volatility is a problem in the equity space. Obviously, this is a more volatile space. It's very hard for us to forecast how volatile the market will be in the next weeks or even in the past week that we have seen. But over the longer term, we can have a much better picture of things, how things are evolving. And this is the whole basis of thematic investments, because there are structural shifts in our society. There are structural changes in our society. And here you can see a couple of them. Productivity is gaining more traction. Demographic changes are happening. Connectivity, we're getting more and more connected with new devices, with Internet of Things, with 5G technology. globalization still happening. And there are long-term trends that are happening. The world today is more secure, is more safer than it was 50 years ago or even 20 years ago. In many respects. And security and safety is, for example, a long-term theme that we believe in as a strong conviction. Technology is also driving changes in the healthcare space, which is an area we focus on called digital health or health tech, which is also another very big conviction of ours. And life expectancy is changing as a reason of that, but also there are strong drivers in terms of cost reduction, in terms of doing things better in the healthcare space. Education is another space where we see strong changes over time. Literacy is increasing over time, and more people are getting an education. But there are many changes around the world. Population is getting older, is getting bigger as well, and there are changes in the industrial world as well, such as using more and more robotics, more and more automation that we believe will continue to happen over the world. And this is obviously not just in the Philippines, it's across the world. This is something we see across many markets. This is a global exposure, a global theme that we can tackle here. And that's why we believe that thematic investment is a great way to look at these long-term stories, long-term trends, what we could call mega trends or super trends. So here on this page, you can see a couple of these examples of mega trends or super trends or growth themes that we look at. Digital health is obviously a strong conviction. I already mentioned that, and I'll go into a little bit more details on what we mean by that. But technology disruption in the healthcare space is happening fast, will continue to happen over many more years. And obviously the pandemic has been a game changer, has been an accelerator, but this is only the beginning of a long-term story. Education, another very interesting space, and I'll come back to this one. Security and safety, this is definitely an area that has been a long-term driver of opportunities and growth, and we believe will continue to do so in the future. Robotics, automation, obviously something that is getting more and more market share traction as these systems are getting easier to use and cheaper as well. And there are other challenges like environmental challenges, infrastructure that we can think of as long-term themes as well. Perhaps one thing to highlight is we received as a platform the Asian Private Banker Award last year, or actually this year, which we're quite happy about this award. If I dive into a couple of themes, so the first one, I think, on the digital health space, on the health tech space, this is truly a game changer in the healthcare sector. The healthcare sector is massive globally. It's one of the largest sector you can think of. Yet it is very traditional. It is very much behind other sectors in terms of technological use, in terms of technological disruption. Many years behind still today. We're still using paper-based solution, fax machines, a lot of old technology, traditional technologies in the healthcare space. And yet there are many problems in the healthcare industry. One of them being costs. The costs are getting bigger and bigger. Cost inflation in the healthcare space has been one of the highest in the world, across the world, in the US, in emerging market, in developing countries, but also in countries in Europe, in China, all over the place. You've seen an expansion in cost. And this is one problem that will continue to happen over the future, over the next few years, because demographic changes will push forward more cost problems, more cost demand, because population is growing, it's also aging, so you get more and more demand for healthcare services. And if we don't use technology, we cannot mitigate the increase in costs. So we believe that technology is a fundamental driver to reduce the cost increase and to bring down cost of healthcare and to deliver better services as well at the same time. So that's why we have such a conviction that healthcare will continue to go through a revolution or transformation over the next few years. It already started, obviously, a few years ago. The pandemic, the COVID-19 has accelerated this trend, but it's, again, very much the beginning still. We're looking at a very long-term story here. And if you go to any hospital, any clinic, I believe in the world, you will see the same things. A lot of paper-based solution, traditional technologies, old systems, old delivery of medicine and treatments. And we believe, obviously, this will change. When we look at that space, and obviously this is offshore investments, we're looking at many investment here in the US, in in China, in emerging countries all over the world. What we see is these companies are growing fast. They're growing much faster than the rest of healthcare. Traditionally, they're growing multiple times the growth of the healthcare system, 30, 35, 40% growth per year on a return basis, on a revenue basis. And they exhibit the characteristic of being platforms with a high leverage. So they can obviously scale up their operation. If you think about telemedicine is a great example, this is an app. Once you scale up this operation, you can add more users, more patients, and you can deliver good services at a lower cost. So this is exactly what we're talking about here. And this is a long-term trend. For us, this is quite independent of politics, of market cycle. It's irrespective of many macroeconomic factors, because everyone agrees that we should do better in the healthcare space. We should deliver better services at a lower cost. And technology is certainly a way to do this. How we look at the space, there are many ways to look at the space, but one way to look at it is looking at the whole value chain of healthcare. So from research and development, where we develop new molecules, new medicines upstream, there are disruption happening there. New technologies coming in the space that can disrupt the way we can develop a new drug or new medicine or new treatment using technologies. And perhaps in the future, it will not cost $1 billion to develop a new drug. It can go faster and cheaper using automation, using AI or artificial intelligence, using data set, using better sequencing of genome. There are many technologies happening at the same time. In the treatment space, this is about new treatments, how we can deliver better treatments to the end patients. And this is not confined to any country. This is global. If you think about cancer treatment, robotic surgeries, new development of new vaccines. I think we had a good example earlier with Moderna, many new technologies coming to the space. And then efficiency systems where we can deliver better efficiencies in hospitals, in clinics, using telemedicine, using online pharmacies, using big data analytics. So there are many new companies coming in that space as well. So very exciting space. For us, it's a strong conviction. It has been over the last 3 years, and going forward, it's a strong conviction, I believe, for the next 20, even 30 years. One area that we look at as well, which I think is very similar in a way and very interesting as well, is the education space. Education is, again, another very massive sector. Some say it's estimated at something like $6 trillion global spend, so massive sector, but very much behind again in terms of technological use, in terms of usage of technology. Pre-COVID, we estimated that only 2 or 3% the penetration, the use of technology in the education space globally. So very much behind compared to other sectors. COVID has obviously accelerated that trend. We've seen an adoption of new technologies accelerating, but we're still in the early days. We are still using a lot of traditional means to deliver education, to provide education globally. And I think one way to look at it, if you look at online platforms, online education platforms, they are growing fast, they are expanding fast. And this is not linked to any single country. This is global. You have a huge platform developing in India, in Brazil, in China, in the US as well. In the Philippines, I believe the EdTech community is quite large, education technology. So this is about education technology, edutainment. This is what we believe as a strong conviction in terms of another trend. I believe the Philippines is a great example. This is a country of 1,000 islands with where you can have access to internet, you can have access to Wi-Fi connection, and therefore have access to good quality education, the best professor in the world, if you want, from Harvard or any Ivy League university in the US, just from a broadband connection. There are similarities with the digital health stories. One of them being the cost pressure in education has been high. It has been high all over the world, in the US, in developing countries, in almost any country in the world. And at the same time, technology has not been used as much as other sectors. So we believe that the combination of both is very powerful. Accessibility to education is another big topic. If you think about disruptive innovation in the education space, you can also improve the accessibility. Again, using online platform, using software solution, using new tools to deliver education with technology, you can improve access. You can improve accessibility in remote areas, for example. And this is also linked to the goal number 4 of the SDG goal, or the Sustainable Development Goals of the United Nations. And then the last piece of it is the millennials. which is a mega trend, a super trend. And we believe, obviously, the millennials are driving that change because they are early adopters of technologies, they are digital natives, and they are the students of today in the world. So if you think about universities or high school today, they are using technology extensively as a population. But when you go to education, it's still very traditional, using paper-based solution, a lot of old school manual, for example. And we think that obviously this is about to change. So we have seen this kind of inflection point in the education space, what we could call this Netflix moment in the education, where we believe this trend is about to explode and continue for many years. And obviously last year was an accelerator for this as well. And the way we look at the space, obviously we can split in many ways, but services, content, systems, and tools, one way to divide the space. Another way would be to look at corporate education, adult education versus student education, because this theme is larger than just student. It also covers the corporate training, upskilling, requalification of the workforce is a very important topic here. Another very strong conviction we have, and we have had for almost 15 years now, is the security and safety space. It's a very strong conviction for us because security and safety is not going away anytime soon. This is a long-term driver. This is a long-term theme that we focus on because we believe, obviously, that the drivers for the demand for more security and safety product and services is just getting bigger and bigger. There are many reasons for that, and the drivers are not changing fundamentally over time. One of them is technology, obviously. As we get more technology around us, if you think about 5G again, or more connection with networks or Internet of Things, which means more devices will get connected to internet in the future, billions of devices. This is a big problem for security issues, obviously, because you get more potential breaches. And we've seen over the last year, just over the last year with the pandemic, a number of breaches accelerating, basically. The SolarWinds one was a massive breach and is a game changer in many respects. But we believe, obviously, technology will drive more demand for security products, not just cyber security, but also physical security, protecting our critical infrastructure, our goods, the supply chain for our food, for our water delivery. If you think about certification for different products, it's also something we must think about going forward. And it's also related to demographic growth. And one big driver here has always been regulation, which has always been a tailwind for this theme. Because as we go further, as we go beyond, we see more and more regulation, not just for data protection, but also for protection of services, for goods, for water, for food production. There are more regulation and not less. And this is obviously driving the demand for security and safety. So this is about, obviously, safer, healthier, cleaner world using product and services that are directly aligned with this view. And how we look and frame, how we look at the space and frame this opportunity is we can split it in these five topics, five sub-themes or five subtopics. One way to look at it is obviously the IT security space, the cyber security space is very important. This is an area where obviously we look at network security, we can look at antivirus, protection of electronic payment services, big data analytics. Everything related to IT security is obviously gaining a lot of traction and a lot of demand. And we are only at the beginning. If you think about it, last year was obviously an accelerator. A lot of people moved online, a lot of their business. We worked from home. This whole working at home environment was a big topic. But actually, the global spend today in IT infrastructure, in cybersecurity, is quite small. Some say it's about 160 billion only. If you strip out what we call the services, it's about $100 billion US dollar. You're left with about $60 billion only on products. So which is not very big in terms of the size of the market here. And we believe, obviously, this will keep expanding. Actually, the Biden administration announced when they got elected and they took office that they would spend another $10 billion in the space going forward in the next few years, which is obviously big in comparison of the size of the market. But there are many reasons we think IT security will keep being a strong conviction. Then there are other areas that we need to focus on as well when we cover the whole security space. One of them is crime prevention, which is related to kind of physical protection of buildings, of our infrastructure. So you can think about surveillance systems. Video surveillance is a big topic. Access control to buildings, identity protection, everything that has to do with background checks, for example. This is only getting more and more demand and more traction. Then there's a whole area related to health protection and health security, which is an area that we've looked at for many years. And I remember a couple of years ago, people were asking us, why do you look at that space, right? It's control of epidemics, vaccines, diagnostics. Is it really a big topic? Obviously, last year it was a big topic, and a lot of people actually understood why now we are looking at that space. And over time, we believe the demand for this space will continue to increase. But it's wider than this. We also look at companies related to food and water control and inspection. Again, thinking about the value chain in the production of food and the production of and control of water is something that is not going away anytime soon. Then there are new topics also appearing, especially on the environmental security space. Environmental security perhaps 20 or 30 years ago was not very important or didn't exist. But today, obviously, it's becoming more and more important as we must think about environmental challenges, incineration facilities, waste management to better treat our environment. But there's a whole area also called TIC or testing, inspection, and certification, where we can test new products, new device, and we can inspect and certify them. And then there's a whole animal health issue. If you think about the value chain and the supply chain of food production, obviously cattle, livestock is a complicated supply chain, and we must make sure this is safe. So this is part of also of the theme that we can think of. Then there's a whole area of transportation safety. Obviously, this is very physical security. So if you think about aircraft security, car security with airbag systems, seatbelt systems, airport and port inspection and scanning systems as well, braking systems for trains, for different transportation device. So obviously, this is a whole area we need to focus on as well, and it's not going away anytime soon. So this remains a strong conviction for us, and I think we will keep looking at that space for many more years. It's not going away anytime soon. The whole space, by the way, is growing at more than 10% per year. If you look at what we call the total addressable market for security and safety, 10-15% kind of growth per year is quite usual. Some areas like cybersecurity even growing faster, and we believe obviously we have many more years of strong growth to go here. Then another topic, another trend that we've seen over the last few years that has been very important, and we believe we're very excited also about this theme, is the robotic and automation theme. Why is that? Automation is getting a lot of traction, is getting more and more attention, and there are many reasons for that. One of the reasons is the price of the technology is collapsing. The technology price is usually deflationary. It's usually going down, right? The pricing of tech in general is going down. But the same happens with robotic systems. If you think about sensors, software, these are related to robotics. And this is something that is deflationary as well. So the price keeps going down. And therefore, we can add more and more of these systems across the board, not just in factories, but in our daily life, in different services that we can think of. And we see this massive expansion of robotic systems and automation systems across the world. So the main reason is obviously the price collapse, but also because these systems are getting cheaper, they're getting also easier to use, and they're getting safer as well to use. So coming back to the safety point, when these systems are getting safer to use, they're actually more interesting to use in our daily life as well. So the whole robotic space is expanding fast, moving away, I would say, from what we could call traditional robotics. Most people, when they think about robotics, they think about a robotic arm or device that moves things around. It doesn't necessarily have to be physical robotics. It can be also software robotics, software automation. And this is expanding fast in many areas. We work in banking here, so obviously on my side, I see it in the back office tasks that can be automated. Many areas in healthcare can be automated today in the labs, in delivery of healthcare, in online pharmacies, in different areas. You can think about chatbots being a very important topic, where we can talk to customer services, for example, using an automated solution called a chatbot. Agriculture being a topic that is getting a lot of expansion as well, with what we call agbots, so more robotics being used in agriculture space. So we see many areas that are expanding fast, and we believe we are only at the inflection point of this fast expansion. how we look at the space, again, three areas, three sub-themes that we can focus on. And these are kind of the main reason why you would look into a robotic systems or automation systems. The first one being productivity gains. If you think about automation, it brings automation, it brings productivity gains, more efficiency in your productivity, basically using new systems for not just factory robotics, not just automation in the industrial part, but also automation for processes, something called RPA, or robotic process automation. So you can automate many processes in your company, in your factory, but also in your office, in your back office. If you think about IT help desk, if you think about HR services, back office services, many services can be automated. Software automation, big topic here. With logistics, we've been looking last year and over the last few years now a lot into logistics automation. Logistics is a big topic, especially during this pandemic. We've seen an expansion of demand for logistics systems. So this is getting traction, and this is obviously expanding fast again. Quality of life, another area that we have a strong conviction. Quality of life automation, meaning we can look at automation in the labs, in the healthcare space, automation in homes, that can bring more quality of life to your daily life. So for example, vacuum systems can be automated in your home. Lab automation means you can automate some of the tasks in different healthcare processes. You can automate some of the processes also in the online delivery, for example, of medicine, of drugs. Many areas like that can be automated. And then the last part is about tasks that are deemed too dangerous, too dirty, too dull, that can be automated. So you can think about food processing automation, where we can automate the supply line of some of the food processing and food production. So if you think about poultry today, or red meat, or fish production, most of these areas are at very low level of automation. Poultry is a bit more advanced, but if you think about the fish production or the red meat production, we're looking at something very low automation, low in terms of penetration of automation solutions. Driving systems, automation of autonomous driving is coming very quickly. This is a big topic in the press. I think it's something that will change our daily life going forward, but this is a task that can be automated. Agriculture, again, an area that we look at as well. Payment services, security services that can be automated as well. These are all areas that are booming and getting a lot of traction. They're happening obviously in different markets, not just in the Philippines, in the US, and in the emerging markets, and in developing countries as well. All over the world, we see basically this revolution happening. So just to wrap up a little bit on what we see here on this map, two more themes and trends that we look at that we could have discussed a bit in more details, but environmental challenges is obviously a big topic. We think that this is probably one of the largest topic in the next few years. Our environmental challenges are obviously huge. They're very important. They must be addressed, and now governments are obviously driving in the force toward more investment in the space. So we believe this is a great investment opportunity as well linked with ESG criteria as well. Infrastructure is another yet very important theme. Why? Because it's in a way the bedrock of everything we do. If you think about this, what I just spoke about, technology in the healthcare space, in the education space, automation, you need the proper infrastructure, you need a proper data center, you need telecom tower with 5G, and then the production of energy will change as well in the next few years with renewables, with more solar power. Solar power is the cheapest way of producing energy today in the world, and getting more and more traction and more market shares. Solar, wind as well. If you think about transportation, this is about to change also the way we can move around. Electric vehicles are coming very fast to the market, so infrastructure is also a big topic. So just to wrap up, we have strong conviction all over the place in these different themes. We can think about more themes, but the way we look at the world is differently in this thematic way of looking at the space. Digital health, security are certainly strong conviction for us. Probably the strongest conviction we have at the moment. And with that, I think I will stop here, and we can obviously take any question from the audience.
Thank you, Pascal and Don, for that very relevant presentation earlier. But before we proceed with the Q&A session, I think we just have a couple of slides that we still have to share with the audience. Then we'll get back to you, Pascal. Now that you know the importance of investing offshore, let me share with you ways you can get offshore exposure through investment options available with Metrobank. Through unit investment trust funds, you can access funds outside the Philippines for as low as $500. We have a wide range of dollar-denominated feeder funds to choose from. Here are the options specific to offshore equities. If you want access to high-value companies worldwide, you can invest in Metro Dollar World Equity Feeder Fund. Meanwhile, if you want to invest in funds that are geographically focused, we have the Metro Dollar US Equity Fund, Metro Dollar Eurozone Equity Feeder Fund, and the Metro Dollar Japan Equity Feeder Fund. Remember that these funds are suited for long-term investors with aggressive risk profile. So these funds are definitely not for everyone. If you are looking for offshore diversification and bonds, we also have the following dollar-denominated bond funds. Metro Dollar Asian Investment Grade Bond Fund, invested in high-quality bonds across Asia. Metro Dollar US Investment Grade Corporate Bond Feeder Fund, invested in investment corporate bonds that comprise the US investment grade corporate bond market. For more information about these funds, you may visit our website at www.metrobank.com.ph. There are several ways to subscribe to any of our dollar feeder funds. For first-time UITF clients, just visit any Metrobank branch. If you are an existing client with dollar UITF, you may now conveniently invest through Metrobank Online. You can also reach out to your relationship manager to discuss these funds and other investment outlets that are available to you for offshore investing. Here in Metrobank, we are with you as you journey towards building your wealth. Okay, so now I think we're ready for our panel discussion. Included in our panel are our previous speakers, and joining them is Mr. Dondi Santillan, Senior Vice President and Head of Metrobank's Trust Banking Group. He is a seasoned economist with almost 20 years of professional experience, having worked in Singapore and New York before settling back here in the Philippines. Are you guys ready? I really have a lot of questions for you.
We're good. We're ready.
Okay.
Yes.
Of course, first one goes to Pascal. Here it goes. How is COVID impacting the development of these themes? Do you see an acceleration of technology and investment in these themes as a result of the working and living situation we are in today? Pascal?
Thank you for the question, and thank you, Karina. As I think Don mentioned at the beginning in his introduction, when he was talking about automation in the production, and I think what was the word? the forward way of doing things, basically. This did not start, with the pandemic in 1918. It started before and accelerated during the pandemic in 1918. What we have seen today is exactly the same thing. This theme did not start with the pandemic we've seen last year. They started much before that. So the digitalization of healthcare, for example, started many years ago, but only started to really pick up during this pandemic. And obviously this has been an accelerator. Same with education technology. Obviously a lot of students were confined home last year, and it really accelerated this trend that was already existed for many years. But what we have seen last year is an acceleration of multiple fold in the adoption of these systems, in the penetration of these market share for these companies. And if you think about education technology as an example, most experts say that this has accelerated the adoption of the whole space by 5 to 10 years. compressed within like a year or 18 months, basically. So this has definitely been a game changer. And if you think about cybersecurity and all the implication in terms of more data usage, more infrastructure again being a topic, behind all of this, it obviously accelerated all of these topics together. So, it has been an accelerator, but it's certainly not the end of the story. So some investor might believe that after COVID, we're going back to normal. We certainly do not agree with that. I think the world is going forward in a different way. I think the example of 1918 given by Don is a very, very good one because the world has moved on and will change. Many business will disappear, new business will appear, and we think obviously that the world will be different in going forward. So I think in the end, this has been an accelerator, but definitely a game changer and an accelerator for all of our themes. But it's definitely still in the early days. So we like to say we are perhaps at the end of the beginning in some of these themes, like digital health, but certainly not at the end of the beginning, the beginning of the end, basically. So many more years of strong growth to go.
Okay, thank you, Pascal. And here's another one for you. Within the Asia region and countries, do you see different demand and growth trajectories and opportunities for these themes? We have seen headlines about healthcare innovation happening in China and Southeast Asia. Could you elaborate on that and your investment theme? Yeah,
Yes,
everyone seems to be, interested in Asia.
yeah, wonder why. No, definitely. I mean, the trajectories have evolved a little bit. I would say in the early days of digital health, when we started looking at the space in 2016 and 17, it was mainly driven by the US. So the US was where the innovation came. Definitely, most of the companies were coming from the US market. But things have shifted. And today we see more and more companies coming from Asia, from China particularly, for many reasons. One of them is obviously data. If you think about digital health, health tech, this is data driven, and you have a lot of data in China and in Asia in general. Population is there as well, and they face the same issues. Cost pressure is there as well. Access to the system as well is a problem, especially in technology is a solution. And we see more and more companies appearing in Asia, in China, and more IPOs as well. So the space has been booming, and the investment opportunity also is adapting. And the way we invest in the space has also been adapting. So I think it's definitely a strong trajectory on both sides. But Asia is definitely looking as a great investment opportunity all over the Asian market.
Okay, the next question is not only controversial, but it's really, seems to be like a very hot topic nowadays. This one goes to Dondi. Can I get your views on Bitcoin and cryptocurrency as an asset class? Go ahead, Don.
Hi. This isn't an official Metrobank statement. These are my personal views.
Okay.
I think first of all we have to acknowledge cryptocurrencies as an asset class. We have to acknowledge that it does appreciate and depreciate. Does it have a space in my portfolio? It really depends. It's not for everyone. The volatility of cryptocurrencies are very, very high, much higher than equities. I remember in one of the first webinars, somebody asked the question, should I get rid of all my time deposit and shift it to cryptocurrencies? In hindsight, it would have been the correct idea. That was back in November when Bitcoin, I believe, was at 20,000 or less, no? But for you to shift from time deposit, which practically has no volatility, to something that's highly volatile, is not advisable. So it has a space, probably for a portion of your portfolio. We have to recognize it as an asset class, but we have to be very careful. It's not for everyone, basically. And again, this isn't official Metrobank. This is my own personal views.
Thank you, Don. Okay, this one goes to Dawn. Dawn, what are the added benefits of having investments capitalizing on thematic opportunities in my portfolio?
Thank you, Karine. That's a very good question, actually. These thematic, the beauty of these thematic equities is that, it's focused on a specific sector, a specific trend that could give your portfolio that extra kick in terms of returns. I mean, these themes we believe are the themes that are actually looking for the next Apple or next Google in or next Facebook in their respective sectors. And having these stories in your portfolios are actually those are the benefits that you want to pick up over time. And another benefit that your portfolio can have is that these themes are actually sometimes not cyclical compared to, or it's not usually moving at the same way as major indices. So if you're looking at S&P 500, and if you're looking for example, what Pascal said a while ago, digital health, for example, there are movements that they may not be of the same direction, or the magnitudes of the returns may not be of the same magnitude, but it will give your portfolio enough diversification that can actually realize those returns over time. Of course, going back to the investment path that we have been saying for a long time, it always depends on your risk profile and return objective. So yeah, there you go. That's those are the benefits that you want to take a look at for these thematic opportunities.
Okay, thanks for that, Dawn. And we have another one for Pascal. Mr. Mercier, the global energy infrastructure is going through a huge upheaval. Is there a very real possibility of phasing out fossil fuel source power generation in the next 20 years? As I understand, with renewables like solar and wind, there are still reliability issues that prevent these from being the baseload energy sources. Do you see other renewable energy options emerging aside from the solar and wind?
Yeah,
Pascal?
thank you, Karina. And that's a very interesting question. Actually,
I
in
know it
the
is.
introduction, you mentioned as I'm an electrical engineer, so I know about instability of these systems because my thesis was about frequency fluctuation when you input too much wind power or solar power in the grid. Yeah, though, I think. I mean, it's very hard to predict when the peak of the current infrastructure will come. I mean, the peak oil has been tried. We predict that for I think 50 years or like 100 years now, and it's very hard to predict when the peak of the current infrastructure will arrive. But what's certain for us is that over the next couple of years we will see a structural growth from these new renewable type of energies because the demand is there, the technology is there, and definitely the penetration of these systems will keep increasing. How far we will go in terms of solar or wind is really hard to predict. Some say 30%. More than that might be, as you point out, problematic for the grid. Now there are solutions for that. If you think about distributed energy storage, if you think about energy storage, it's a solution to tackle that fluctuation and stability problem. But I think the main point is there are a number of technologies that are really available. They're already profitable, so they're not subsidized or loss making. So therefore, they will keep gaining more market share. And the structural shift that we will see is definitely a decline into the traditional infrastructure in energy production. So obviously, oil and gas will remain main source of energy for many years. They're not going away tomorrow, but the structural decline that we will see over the next decades will continue to happen. That's a given for us. It's a strong conviction. As per other type of energy production appearing, we already see a number of other solutions. Hydrogen's solutions are picking up. Obviously, last year they had very strong performance. Hydrogen storage, for example, solutions, not necessarily linked, but the appreciation we've seen and the hype we've seen around these names is definitely given from the fact that a lot of investors and a lot of experts believe this is an interesting opportunity as well. Bio waste is another example of another technology that could be used more and more to produce energy. And I think we will see a number of new technologies coming to the market. So it's again not the end of the story. It's only the beginning. But usually when you see an expansion in a new field, it opens more doors actually that we haven't even think about yet. So I think over the next couple of years, decades, we will see a strong transition of our energy production. Transportation as well will be changed into a more renewable, certainly renewable way.
Interesting. That means we will have to invite you again next year for an update on those, changes on energy source. The next question
Definitely.
goes to the next question goes to Don. Given the strong performance of tech names last year, do you think it's already too expensive to even try investing now?
That's a
Yeah.
very
It's a
common
very
question.
common question. And for some reason, everyone would still want to know, is it too expensive? Can we still enter? Is it too late? So here it goes again.
All right. So basically, I want to answer that in two aspects. First one is history. Actually, I was attending a webinar on biotechnology yesterday also, and that question actually came up, and the response was, if you were looking way back in the early 2000s, if you were comparing biotech versus a slew of all the equity names that were present back then, it was already expensive, and people were also asking the same question. It's already expensive. It has already gone up. The valuations are really high. Do we still come in? And if you did come in, it would have been a very good investment for you long term. And the second one would be, I'd like to answer that basically these themes are actually for long-term investments. And of course, we cannot promise that the returns will be stable over time. But we do believe that these stories will materialize in the future, no matter how expensive it is currently. It will materialize in the future, and people will still value the future technologies that these names or these themes will bring, and the changes that it will, bring into the world. So those will be my answers for that question, Karina.
Maybe
Thanks, Don.
I could add something on this, just
Sure,
from my
go
side,
ahead.
because I think it's very interesting. The reason why we like Thematic so much is exactly what Don said. This is about the end point over many years. We're talking about a long cycle here, not over the next quarter or 6 months. And when we look at the business, on the business side, when we invest in a company, in a business, we're not trying to predict what the earning will be on the next quarter and then overreact or review of guidance or things like that, which is what most analysts do, I would say, on Wall Street and different investment philosophy. Our review is over the next 10 years, 20 years, what the company will look like in terms of market shares, in terms of penetration in market and an expanding market. And this is, I think, the best way to tackle and to think about these themes, because very hard for us, for any investor, I think, to predict where the market will be in 6 months.
Yeah.
But again, if you think about 10 years or 20 years from now, there are a number of companies that will take more market shares. They're small today, they will get bigger, and new companies are coming to the market. And this is exactly what we're doing on our side.
Yeah, tell me about it. We always say you can never time the market. I mean, all you have to think of, it's going to be a long-term investment. So here's another one for Dondi. What does the Philippines need to do, or what does the Philippines need to do or have to do so that we can expand to house these growth sectors, industries offshore?
I think Don mentioned earlier the K-shaped recovery, right? There are two slopes, or there are two lines, one sloping down, one sloping up. The ones sloping down are the brick and mortar, the traditional. The ones sloping up are the innovative, right? If you look at the Philippines, most of our industries are in the downward sloping line.
Downward side, yeah.
There are only a few innovative and technology-related companies on the upward sloping side. So the question is, how do we expand those businesses? I guess it's a structural thing. You know how Filipinos are great singers. They do great covers of great bands. but we're not creative. So that pertains to the education system. When I was educated in the Philippines, they teach you how to memorize from books. When I was educated in the US, you can take exams with your books open. It's about being creative, about critical thinking. So one is education. Second, the internet infrastructure. Do you know that in the Philippines, there are 130 mobile phones out there versus a population of 100. So the penetration is 1.3 times, right? That's quite high. The problem's the internet service. Because we're 7,000 islands, a lot of the internet in the Manila is great. Probably internet in Cebu City is great, but when you go to far-flung provinces, it's not that great. So internet's another thing. And then obviously third is probably the government has to give incentives to build this type of industries. If you look at other countries, particularly Scandinavia, for instance, no, there was a time in Sweden, I think, no, or one of the Scandinavian countries, Nokia, Finland rather, sorry, Nokia was the biggest company. Obviously, that did not pan out after iPhone and smart mobility came out, no. But you know that at some point, Rovio was the biggest company in Finland. That was the maker of Angry Birds. If you look at Sweden right now, a big contributor to their GDP is Valheim. You know, we're great in technology. We're great animators. We're great people creating apps, but we're not creating those apps. And I guess fourth is the capital, the ability to raise money. So we don't have enough VCs supporting these businesses. So I think first and foremost, education, the availability of internet throughout the Philippines, and I think we have to look at incentives from the government and raising capital, the ability to raise capital.
Yeah, here's another one for you, Don, before you go. With the semi-crash of US stocks, how long do you think this will last? And do you advise to go in now or wait for further pullbacks before going in?
Yeah, I think earlier this year when rates were at all-time lows, we said the natural flow was to shift from fixed income to equities, right?
That's right.
Normally when rates are low, you want to shift to something with more potential. You look at the Philippines and you look at US, the interest rates are even lower than inflation rate, right? However, if you look at recent happenings or what happened in the US, what happened in the Philippines, and what happened globally, interest rates are on the rise. So I think that's also creating a flow from equities back into fixed income.
Fixed income.
But again, equities, like Don mentioned earlier in the earlier presentation, will always have a place in our portfolio, as will fixed income, as will other asset classes. Okay, and when you think equities, you cannot think 1 year, 2 years. You have to think perhaps 10 years, 5 years, 10 years, or even longer. Remember, if it's preparing for your retirement, then we have a longer time horizon. My general rule, I don't think there's an amount that has to be put in equities. For me, anything that you will not touch over the next 5, 6, 7 years should be put in equities. So it's not like 30%, 40%. Yeah. It's your own personal situation. If you are liquid enough, then you can put a bigger portion in equities.
That's a good point. Thank you, Don. This one goes to Don. Don, ideally, what percentage of a portfolio should be allocated in investments in thematic opportunities?
Oh, actually, I would echo what Dondi said. It would first, it would really depend on your personal need as of the moment. How do you want to design your portfolio? What is your return and risk objectives? These are the things that that you would want to take to ask yourself before investing in these themes. I mean, I will not hide the fact that these themes are somehow more volatile compared to your regular equities. So it's a matter of how much risk are you going to take, and how long you need to going to hold on to your portfolio. So those are the factors that you want to ask yourself. There's no perfect percentage, and again, as Dondi said, it will depend on your personal situation.
Yeah, that makes sense. Thanks, Don. Let me save the best for last. Pascal, as the world gets more interconnected through data, networks, and digital systems, what does security mean in this context? And what in particular about this trend do you think will be more important in the years to come?
Yeah, thank you for this
Pascal?
one because thank you, Karina, and thank you for the question. Obviously, this is, I think, what I touched upon a little bit in the presentation. What we've seen, what we're about to going to see in the next few years is a massive expansion of data. I think people don't underestimate a lot this expansion of data. We're all talking about self-driving cars at the moment. Obviously, this is a big topic, but the amount of data that is generated by these self-driving cars is just insane. And if you think about wearables in the digital health space, about having more device connected to internet with Internet of Things, that means that we have a constant data flow of more data being handled, being driven, being pushed toward the web actually at all time. And over the next few years, this expansion will be massive. So cybersecurity breach will happen more and more often, as we have seen over the last year, with more people working from home as well, with more people using technology from home, and I think this is a massive opportunity. And for us, it's obviously a big part of our security space. We believe the number of companies that will keep coming in this space will keep expanding. There are very interesting companies in that space, and it's getting more and more, I would say, technical. Some areas like cloud cybersecurity did not exist so much a couple of years ago, and today you have companies only active in a very specific part of the cloud, and a lot of companies are moving to cloud. So this will continue to happen. For us, it's a massive opportunity. And I think, as I said earlier, the space is very small compared to what we might think of. We're talking about a few hundred billions. It's not a massive space at the moment, but it will come a day where it will be a much bigger space than it is today. So I think we're still quite early. But yeah, we have to think a bit exponentially. I think it's very hard for human brain to think exponentially. We usually think a bit linear, and when we see what happened in the past, we tend to extrapolate on the future. Well, actually, we think we are just at the inflection point of this massive expansion. And if you think exponentially, the future for cybersecurity, for data handling is just starting.
Thank you, Pascal. Thank you, Dondi, Pascal, and Don for being with us today and for what you have shared with us. I'm pretty sure our audience would want to have you guys back maybe after 6 months or a year for all the updates on the different themes. We hope that everyone gained insights from your presentations this afternoon. And thank you everyone for your questions. Before we end this session, we would appreciate if you can spend a minute or two to answer our survey. You have the option to use either your smartphones and the built-in QR scanner or the QR scanner app to scan the QR code flashed on your screens. You may also use your desktops or laptops and simply click on the link at the right part of your screens. This will only take a minute of your time, and this will surely help us to improve our future webinars. That concludes our program. On behalf of our Trust Banking Group, I would like to thank everyone for participating in this exclusive webinar. Again, I am Karina Villegas. Thank you, everyone, and stay safe.